Thank you very much. This presentation does have some forward-looking information against our cautionary statement regarding those. Sabina owns the back river belt, 80-kilometer long banded iron formation belt in southwestern Nunavut. Feasibility complete. Have received now a recommendation for our last final license to be before we're shovel ready. Feasibility shows that we'll produce 240,000 ounces a year for the first 8 years of mine life, 200,000 ounces a year over the 12-year life of mine. Feasibility was completed at a very conservative $1,150 an ounce with an 80-cent dollar, and that showed a very robust 24.2% after-tax IRR of the project. We've now completed also our Inuit Impact Benefit Agreements, so we can say again we are now a shovel-ready project. These are the highest grade undeveloped open pits in the world of over 500,000 ounces. And again, very strong treasury, over $62 million in the bank. We acquired this belt in 2009, and since we have acquired this, we've grown the resource from a little over 2.2 million ounces today, including measured and indicated over 7.2 million ounces at 6 grams. These are extremely high-grade deposits. The majority of our resources, our reserves, are open pit. 72% of our reserves are open pittable, 28% underground. You look at where we compare to other peers, again, and to the right of us are the other open pit operators. These are basically double the grade of our nearest competitors. We have focused on exploration, even though that we have a very large resource. And if you look at the stars, those are targets that we have followed up and or are following up and developing. If we take a look at this 8-kilometer part of our 80-kilometer long belt and what we call the Goose portion of the belt, you'll see the reserves and the resources of each one of these individual deposits. And again, where we have been focusing on growing these post-feasibility. And that's really been the Lama, what we call the Lama Deep, Umwelt, and what we call the Vault, and the most recent discovery being Navoyak, which I'll talk a little more about. Navoyak is a new resource, or a new drill hole intercept. It is down plunge from what we see as the Goose pit, which is a 1 million ounce resource, a little over 700,000 ounce reserve. And what we believe is this is part of the interconnectivity between Goose and Lama and Umwelt along the keel of this iron formation. The initial drill hole in Navoyak was just under 40 meters of 11.5 grams gold, so even higher grade than our current resource and reserve. We own 100% of the prospective geology within this 80-kilometer long belt. To the northwest of the main deposit is what we call the George deposits. These are outside of the feasibility, another 2 million ounces at approximately 6 grams in measured, indicated, and inferred, and indicated and inferred. And these are not part of our current mine plan. This is really future growth, for future optionality within this belt. A little bit of discussion on banded iron formations worldwide. There are very few that are over 5 million ounces. If we take a look at this chart, the diagonal lines that you see are logarithmic in terms of total gold resource, with 1,000 tons representing 33 million ounces, 100 tons representing 3.3 million ounces. And you can see is we're well on our way to being one of the largest banded iron formations in the world. The one thing that all of the larger ones have in common, if these have been in production for a number of years, they did not start with a resource as large as we have today. Again, they tend to be very deep-seated, long-life deposits. If we look at the granddaddy, them all being Homestake, that was almost a 100-year mine before final, and not even depletion, before running out of economics at depth. Our feasibility, again, use a conservative $1,150 gold and an 80-cent dollar. Our C1 cash costs of $534 per ounce, all-in cash costs, including reclamation, of $763 an ounce. with a obtainable capital cost of $415 million Canadian. If we look today at the sensitivity table to the right, we're between 75 and 80 cents, and between that 11.50 and 12.50, and you can see that does have a market improvement on not only our IRR but our net present value using current prices. Exploration has been very accretive for us, and again, despite having a large resource base, we've been able to deliver 3 new discoveries in the last 2 years. We have increased our drill program several times on Back River this year, and again have delivered not only increased visibility on growing the resource, but also some very high-grade intercepts between Llama, Deep, Umwelt, Vault, and also the new Navoyuk discovery. The new Navoyuk discovery is a kilometer to the west of the main Goose deposit. Again, it has strong similarities. What we see is the Vault deposit, and the Vault, so far the arithmetic average of our intercepts on that is over double of our already high-grade resource. We do have additional holes and additional results that we expect to be able to deliver from Navoyuk this season, with drilling still underway. We've also been advancing the construction of the project. If we look on the top left photo, we'll see what the marine laydown area or a port facility looked like a year ago. And today we've completed the construction of that marine laydown area. You can see the laydown pads, the barge landings, airstrip camp, fuel laydown areas in the forefront in the right photo. We concluded that at a cost that was favorable to what our 2015 feasibility showed, and again did it ahead of schedule. Also included with that is the camp within there, several other photos of that marine laydown area, and a big part of that is developing that infrastructure and logistics for the north. One of the other passive attributes or pieces of Sabina is we also own a very large silver royalty on the Hackett zinc silver project, and that is 22.5% of the 190 million of the first 190 million ounces of silver produced, and 12.5% thereafter. If we look at where Hackett sits in relation to other large high-grade silver VMS or precious metal rich VMS deposits, again, one of the things that you'll see with many of them to the left of us that are larger or higher grade, they're in late stages of mining and or mined out. Again, another very important assets of Sabina's. We have the right to buy this asset back from Glencore if they have not made a production decision, and again, the terms of that are laid out within this slide. Something that we believe is that we have a possibility of turning from optionality into cash value. If we look at Back River in terms of where it sits compared to our peers in tonnage and grade, you see the only ones that are to the right and higher than us are either Dalradian, which has now been taken private, Lundin and Continental, which have majors as partners. So again, we look at the vast majority of these. This is a project that stands out. I would say that we look at the NAV of the project. We're trading at a discount today, as many are in our peers, but also with being high grade now, being a project that is shovel ready, and where we sit, we believe that this is a project that will be in the forefront of many's eyes. Many catalysts as we transition to producer, and Sabina value is certainly much more than Back River. It's a compelling district and one of the highest grade undeveloped deposits in the world. Thank you very much.